Call it high anxiety in high yield debt. Implied volatility for high yield bond ETFs has been absolutely surging. Look at that bottom graphic, folks. You can see people are nervous. Could the worst be ahead for junk? By the way, welcome to Trading Nation, everybody. I am Brian Sullivan. We're joined by Albert Brenner of People's United Bank and Stacey Gilbert of Susquehanna. Stacey, I'm going to begin with you. Implied volatility is up, but does that necessarily signal doom and gloom ahead or just nervousness?
That's a great question. And what it signifies is nervousness. And what it also signifies is it recently moved a lot and there's the potential for more moves. I always think of implied volatility as kind of like that potential energy. It has the potential to move. You don't know which direction. And today would show you that it actually, with the HYG up almost 165 basis points, that it can move to the upside just as dramatically as it can move to the downside. So overall, that implied volatility is a risk parameter and it's the expectation for future moves. If you want to know better kind of which direction the world is setting up, you look at a slightly different metric there, and that metric is more concerned to the downside than the upside. So the expectation is that large moves, which implied volatility say could happen, are still more likely to the downside. We could still see more weakness in high yield. And another interesting takeaway I just want to throw out there, when implied volatility gets to these high levels, as your chart pointed to, we'd start to see a lot more spread trading, where an investor will buy one option and sell another option against it to reduce some of that volatility exposure and just to get some directional exposure. And that is incredibly active right now in HYG options. So if you're just looking at the volume of HYG options and it says the puts are trading 100,000 puts, recognize that some of that could be spreads where some options were bought and some were sold.
Okay. And, listen, Albert, high yield is kind of like storm for a sailor. You're on a boat. You hear about a storm coming, two things are going to happen. The storm is going to come in and you better get the hell out of there, or the storm is going to pass and you can go on your way. I think a lot of regular investors, non-professionals, don't really understand the high yield space or what it might mean. What do you think? What's your advice to clients?
Well, there's no question, Brian, that a lot of investors don't understand, and they've been attracted to high yield because of the yields on it.
Sounds great. Hey, I got a great bond for you. It's 11%. It's oil. It's fine. Don't worry.
Well, exactly. And so long as people call it high yield instead of junk, then people are okay with it. But the high yield space is a real stew, if I can mix metaphors here, where you have a certain amount of that space is fairly reliable, but you have some securities in there right now. I was looking just this morning at some of the components in the HYG, and you have securities in there that are trading at prices below 20 cents on the dollar right now, and you'll find a lot of them in the energy sector. On the other hand, take a look at the banking sector of HYG, and the average price there is over 103.
Yeah, and what does that tell you then?
Well, it tells me that there is hurt coming for certain sectors, and there was no surprise in the energy sector that that's the case. The energy sector did use a fair amount of debt financing that came out below investment grade. And I think there's a general concern, to Stacey's point, uncertainty regarding just whether or not the entire asset class is going to suffer or there's going to be contagion that will spread to the other sectors within the high yield space. At this point, I'd have to say we don't think so, but there's still uncertainty there.
Yeah, and listen, you've got oil bonds that are trading. I looked at a few before we came up at 12 cents on the dollar. So a scary time. We'll see if those spreads. Albert, Stacey, a big important discussion and topic right now. Thank you.
Thank you.
Folks, thank you for tuning in to Trading Nation. I'm Brian Sullivan. We'll see you next time. Take care.